Welcome back. I'm Ted Thomas, and I've been involved in tax lien certificates and tax defaulted property for over 25 years. Now in this episode, I'm going to cover how to invest in real estate tax liens. This is going to be a lot of fun for you, so just kind of open up your mind, let a lot of new information fall in. I'll also go over some inside tips on making money and some of the secrets of tax liens. Now this is really part-time work, but it's full-time money. So hang in there for a little bit, because at the very end, I'm going to show you 2 mistakes that auction buyers make all the time, and you want to avoid those mistakes. I'll be right back. How to invest in real estate tax liens. Now everyone wants to make money, I get it. So you want to go to a real estate course and learn how to do it? Well, we're going to teach you one right here on these videos, okay? Now, all privately owned property in the United States is taxable. Now, what does that mean? That means it's going to have a property tax. Now, that property tax is authorized by the legislature, and they have a treasurer in each county do a couple of different things. First, they levy the tax, then they collect the tax, and if they can't collect the tax, what they do, in half of the states, they'll issue a tax lien certificate. Now, what does that mean? Well, it's just a piece of paper. However, they sell those pieces of paper because people didn't pay the tax. Now, if you raise your hand like I'm doing now at an auction and buy a tax lien certificate, you're investing with the local government. That means you're going to get your checks back from the local government. Now, these certificates really pay well. First of all, they make sure you're going to get all your money back. Then you can earn 16, 18, 24. You can earn all the way up to 36% interest on your money. Now, you don't get a property, so you don't get possession of the property. What you get is a certificate. That means you don't have any management problems, no collection problems. You're just going to earn money. So all the properties, they try to keep them on the tax roll. Now, they fall off the tax roll in the event that people don't pay the tax. So the county is interested in collecting that tax. Now, we'll talk about those defaults over the next few minutes. So this episode is all about how to invest in tax lien certificates. Now, once a property gets on the default list, it's hard for that property to get off. So what they have to do is they have to pay the tax. So you and I really benefit if we invest with the government and we get a check back from the government. Nothing wrong with that. It's going to be predictable, it's going to be certain, and it's going to be secure. So the county will send a default notice to anyone that doesn't pay their tax. Now, half of the states sell tax lien certificates. The other half of the states, they sell tax deeds. Now, later on, I'll talk about tax deeds, and that's when the government's really firm. They actually confiscate, they seize the property, and then they resell it at auction. But right now, we're talking about tax liens. Now, with tax liens, what they do is they actually issue a piece of paper, and you can buy that piece of paper by investing directly with the government. Now, if you purchase one of these certificates, you can do it online, sit right at the computer you're sitting now, or what you could do is you could go to an auction and raise your hand and buy the certificate. But what happens when you buy it, you now control the property. Can you imagine that? You just get a piece of paper and now you control the property. Now, 95 to 97% of these certificates will pay you back all your money within 24 months. 95 to 97%. So that means most of the people that buy a tax certificate are going to earn a pretty high interest rate. Now, I'm talking to you from Florida today, and in Florida, the certificates start at 18%. So that means you can make up to 18% on your investment. When you pay someone else's taxes, you can now be earning 18%. Now, compare that with a local Bank of America, Bank of Florida, or whatever it was, that are paying 1% or less. So tax lien certificates have been around for a long time, over 200 years. Now, I didn't invent it. All I did is learn it myself. I've been doing it myself for over 25 years, and now I've been teaching and guiding other people how to do it. So this is an investment that's predictable, it's certain, and it's secure. Anybody can do it. You can start out with 50 bucks if you want. Now, these have been around for a long, long time. Now, I don't know where you live, so if you really want to know what tax liens pay in your community, well, just drop me a note and let me know, and I'll tell you what your state is paying, and I'll give you a nice gift to go along with that. All right, so let's go back to the different counties. Half of the counties in the United States will sell tax lien certificates. Now, it's only a piece of paper, but basically what it is, it's a lien on the property. So you're going to pay someone else's taxes, and you're shaking your head and saying, you don't even want to pay your own tax, let alone someone else. But you want to pay this tax because, number one, it's going to be safe and secure, but number two, you're going to earn a high interest rate. So think about that. Now, let me travel around. We'll just kind of travel around in our mind a little bit about some of these other states. I know you'd like to make 24% on your money. Well, you could do that in Iowa. Now, you're not living in Iowa, so you're saying, Ted, I'm not going to Iowa. You don't have to. What if we could do it online? Or how about if we went to Illinois? In Illinois, we can make 36% on a tax lien certificate. Think about that, 3% a month on your investment. The banks are paying 1% for a whole year. So it doesn't matter which state that you want to be in. Half of the states will sell tax lien certificates, and the other half of the states, they're going to sell tax defaulted property, and we'll get into those a little later. All right, so what's going on here? Well, the local government has a big problem right now if someone doesn't pay the tax. You see, the taxes, really the lubricant that keeps the government going. Now, the local government, your county, has a lot of bills to pay. So let's talk about that for just a second. Now, those bills are big bills, like for the police department. Someone's going to pay them. Someone's going to have to pay for the firefighters. Think about that. And they also help out the hospital. Now, roads don't just get built. Counties have to build the roads. They have to maintain the road. What about school teachers? Well, first of all, they got to have a building, so someone had to build a building. The county does that, and then the school teachers get a place to work. The point is, the local government has a lot of bills to pay. Now, if people don't pay the property tax, it's a big problem. So property tax is required of every property owner. All right, the only properties that I know of that don't pay tax are the churches, sometimes the school, but the churches and buildings like that, they don't have to pay taxes. But we all have to pay taxes. It's not a very high tax. It's 1 or 2%, except in the high tax states like New Jersey and New York. But basically, if the owners don't pay taxes, how are we going to have a government? So what does the government do? They take care of that quickly. What they do is they issue a tax certificate and let you and I invest in those certificates. Now, I'm going to talk more about those later, and I got a few questions I got to answer right now. If you have a question, you just go ahead and submit it, and I'll try to get your question on a future video.
Ted, can you explain your process of buying where you live or buying where you sleep at first?
Okay, this is a common question that comes up. People say, well, Ted, where do I want to buy? Now, some people like to buy right where they sleep. Nothing wrong with that if you're in a state that sells tax lien certificates. But if you're not in the state that sells tax lien certificate, it doesn't matter. I teach this same class in the United Kingdom. I teach it in Singapore, Bangkok. We teach it in all the provinces of Canada. And now, of course, online, we can teach it anywhere in the world. But the point is, you can do this online. So if you have a community that you live in, why not just buy nice and close and invest there? You see, when they issue a tax certificate, they're really helping a lot of people. And when you buy one, you're helping a lot of people. First of all, the homeowner doesn't lose the property because you don't get possession. They're going to keep the property. And secondly, the county gets paid. And you want to make sure your local county is healthy.
Okay, Ted, can you use credit cards to buy tax lien certificates?
Okay, so some people ask, can I use a credit card to do this? Well, this business has really evolved. I've been doing it for 25 years, but it's been around for 200 years. There are some states that do things with credit cards, okay? I don't know any state that does tax lien certificates with credit cards, but later on when I do a video about tax deeds, we'll watch that and I'll show you states where you could actually buy a property using a credit card.